Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. We are going to be pricing out 5 different mortgaging products. 5 mortgaging products right now that I hate pricing out because it sucks. Every single day I look at this, it's almost like an hour by hour type of thing, almost like a minute by minute thing where interest rates are increasing and we're seeing it just tick, 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 tick getting up there. But we're sitting today at 4/21/2022. So what we're gonna do is we're gonna go ahead and price out 5 different mortgaging products. A 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And if you don't know what a 5/1 adjustable rate mortgage is by now, it is interest only, fixed for 5 years, then adjust every single year after that according to the cap on your product and the market rate. So 30-year fixed currently is sitting at 5.38%. That is 0.11% increase from 1 day ago. That is 0.23% increase from 1 week ago, 0.72% increase from 1 month ago, and 2.22% increase from 1 year ago. That is a 52-week high. 15-year fix will be sitting at 4.79%, 0.17% increase from 1 day ago, 0.34% increase from 1 week ago, 0.82% increase from 1 month ago, and 2.18% increase from 1 year ago. That is also our 52-week high. 30-year FHA will be sitting at 0.20%. Or a 0.20% increase from just yesterday at 5%. That is 0.25% increase from 1 week ago, 0.75% increase from 1 month ago, and 2.34% increase from 1 year ago. 30-year jumbo will be sitting at 4.59%. That is 0.19% increase from yesterday, 0.24% increase from 1 week ago, 0.54% increase from 1 month ago, and 1.28% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.25% increase, or 4.25%. That is 0.11% increase from 1 day ago, 0.23% increase from 1 week ago, 0.41% increase from 1 month ago, and 1.63% increase from 1 year ago. That is also going to be our 52-week range high, which in actuality, it's not actually our 52-week range high. This will be actually the highest interest rates that we've had since, I think it's about 12 or 13 years. Oh, well over a decade. So well over a decade that we've also, you know, we've just been on the highs. We haven't seen the 5s in a very, very, very long time. So the problem is whatever news radio station or broadcasting station that you're listening to, the interest rates are ticking up, and there's so many different variables to it that from the very morning, if you watch the rates come out first thing in the morning, by noon they could have automatically already been changed. Like yesterday we had 3 different changes. That is in the course of a day. So if I gave you a mortgage rate for noon, by 2 p.m. it's already changed. So that's why you have to always, you know, that's why I always say that these videos that I make, it's for informational purposes. These are rates that are at that very moment, and they're all like fluctuating, especially now since Powell is just, you know, he's like, you know, they're in a position right now where they knew they kind of messed up. They didn't counter this inflation thing early enough, and now we're kind of just, you know, it's accelerating to a point where nobody really expected it. Most people that were in the purchase market, which as of the report today, purchase markets have declined. Yes, ladies and gentlemen, the rate or the purchase market has declined. This is something that they're trying to call normalization, whatever the hell that means. So how high are they trying to go ahead and increase the rates to go ahead and do this quote unquote normalization? Now, whenever they say anything where they're trying to make something like a word, do a play on words to where it's understandable for the whole entire world, that just means, you know, get ready that they're really, really trying to middle you right now, because we're getting middled really, really, really bad. So as far as mortgage rates go, you know, by this morning it was at 5.11%. By now we're at 5.375. So they're all increasing. Now everybody's also adjusting their numbers according to, you know, one of the biggest insurance bodies, one of the biggest corporations in all of mortgaging, the two, which is Freddie Mac and then Fannie Mae. Now, Fannie Mae, they are adjusting their origination forecast for 2022 to 2023. Now, Fannie Mae has lowered their mortgage origination forecast for 2022 and 2023 due to the Federal Reserve's aggressive inflation-fighting monetary policy and corresponding volatility in the mortgage market. Fannie Mae's Economic and Strategic Research, ESR, group drops its projected single-family mortgage origination volume for the year of 2022 from $3 trillion to $2.8 trillion. It also downside the 2023 forecast from $2.7 trillion to $2.4 trillion to compare in 21, which was at $4.5 trillion. Now, if you go ahead and you look at those numbers, that is almost a 50% decline. That's like between 40 and 45% decline. That is a massive, and this is them they're kind of just playing catch up. That's all they're doing. They're not doing this to go ahead and, oh, I know what I'm talking about and this and that. Everybody right now has no idea what the hell is going on because we're just at the mercy of how high these rates are going to go. Of course, like I said before, we are projected it to be somewhere in the 6s, maybe even the 7s. I wouldn't be surprised to kind of see how high, how much we have to go ahead and counter this hyperinflation that we're currently in this debacle of a situation where this whole pandemic thing put us into. And yeah, that is your mortgage rate update. So for up to 50% commission rebate, 0% listing on selling your current home or any mortgaging assistance, link in the description below. We'll keep you up to date on the news, real estate news. We'll keep you up to date on mortgage rates, all that other good stuff. Screw the rest of the channels. This is the only channel you want to go ahead and see. Like, subscribe, comment, all that other good stuff. Until the next video, guys, I really appreciate you guys watching. Yeah, like, subscribe, do all that stuff. Late.